My name is Ayanda Siboni. I'm the Group Executive for Mutuality at PPS, and the views expressed here are my own. An annual report is very relevant for people who've got an ownership interest. Like in the case of PPS, we don't have shareholders, but our members are owners, are like owners of our business. So when they get the annual report, it gives them an overview of how the business has performed, what's important in the business, and what we're planning to do for the future. It also gives them a view of how we've performed financially, how we've deployed capital, how much money we've made. So that's quite an important element for someone who's got an ownership interest to understand about the business. Sustainability report, on the other hand, gives a view of how the business is impacting the world and how the world impacts the business. So in simple terms, how the annual report tells people if the company is sustainable is there are a couple of things. One is the story that is being told. Secondly, we've got auditors that audit the numbers and give assurance that the numbers are as the company says the numbers are. But most importantly, it is telling what are the operations, how does the business make its money, and how big is that market, how sustainable is that market, and how much it's growing. That's a big lead indicator of how a business is doing. Transparency is very important because as leaders of business, we are custodians of other people's money. So what the members or the shareholders in the case of a listed entity need to know is how their resources are being allocated, how they are being utilized. So it's important that you feed back to your stakeholders, whether it is be members in the case of PPS, which is a mutual, or shareholders, so they understand exactly how you are spending the money that you are in charge of. Sustainability is about how we impact the environment and how the business is impacted by the environment and how the environment impacts the business. So sustainability reporting is broken down into 3 acronyms, which is ESG, which is environment, social, as well as governance. So when you look at how the business conducts its operations, how does it impact the environment? Is it taking away from the environment? Is it destroying the environment within which it operates? Or is it doing it in a way that is neutral to the environment? Is it responsible in terms of doing that? Secondly, how does it impact from a social perspective? Does it take away from communities? Does it build back? So that's the second element. And then the third is the governance. Are there sufficient separation of powers? Are there sufficient controls and is there sufficient independence in various elements of how the business is run? The annual report gives a good overview of all the activities of the business. So I really encourage people who've got an ownership interest, like our members, to read through it to understand exactly what it is that is happening in the business. And how you can tell if a company is walking the talk is just by reading, understanding what they're saying, and verifying it for yourself. It's important that companies report accurately and give their stakeholders a good sense of what's happening in the business. One of the wonderful things as well is that organizations have annual general meetings where members or shareholders can come in and ask the questions where they need further clarity. Marketers are communication specialists. They are there to take complex concepts and make them simpler for people to understand. So the role of marketing is very important because it gives the reader, they take the view of the reader instead of just taking the technical information and communicating that. The marketers take that complex concept, make it simple for people to understand, break it down into its essential elements, and then tell the story from there. Yeah, for anyone who's got an interest in an organization where they've put their own money in, it's important that you find out how the business is run. You know, many people think businesses just run on their own. They run because they've got managers that are responsible for running the businesses. And those managers account, one of the ways that they account back to interested stakeholders like shareholders or members in our case is by reporting back in the annual statement. So it's important that they read them, they understand them, and where they don't understand, they ask the relevant questions. A lot can change in 1 year. And the reason why we need to be consistent in reporting is to tell the story, is to explain where we're going, and to also be held accountable. If we say our 5-year journey is to go from point A to point B, when we're telling the story every year, it should be telling the story of progress, how we're progressing towards those goals, how we're meeting those goals, and if there's any change in plan, how we're changing that plan and how that change relates to us getting to point B. So consistency is very important because it gives the stakeholders a good understanding of why things are happening the way that they're happening. The story that we want to tell as PPS, or the story that we do tell, is the story of how we support professionals in South Africa, and those professionals support the country, of course. So when we tell the story of how many claims we paid, those are professionals whose finances have been protected. In the case of death cover, those are families who can carry on, and the dreams can carry on because the person who is deceased has had their PPS claim paid and it has protected their family's finances. In the case of a short-term insurance, if your car is written off, it's getting you back on your feet. So all the different elements and all the businesses that we have, members that retire, the investments that we grew and the profit share that we give to our members, all that is told through our annual financial statements and our integrated report, because that is the moment of truth. That is how we make an impact to society, make an impact to professionals, and make an impact in South Africa in general. All reports need to have certain elements that they include in order to tick some boxes, because for a report to be valid, it must meet certain requirements. But a report that is effective is a report that educates, that understands that not everyone is a financial professional or an accountant, and it doesn't matter what profession you're in, you understand exactly how PPS generates its income, how it supports its members, and how we actually get the profit share, record profit share this year, by the way, that we do because of all the activities that we take care of. So if you read the report, it will give you a good sense of where we are as a business and how we got there. Sure, reporting is evolving. There's a lot more requirement for more transparency and for reports to be a lot more understandable. So the reports now are a lot more detailed than what they used to be many, many years ago. I saw one of the PPS reports of 30 years ago, and it's nothing like what we're doing now. So going forward, I anticipate that reporting is going to be a lot more about the activities of the business, a lot more in layman's terms, supported by the numbers, as is the trend is now. What I wish I had been told is how important it is to understand how a business is operating, how a business is doing. Many people invest their money in businesses without having a good understanding of what are the drivers of value in that business. Where is it going? What is the strategy? So understanding that is crucial for anyone. It doesn't matter how much money you've invested. Your money in the long run grows. And for it to grow, you need to invest it in organizations and in companies that have got a future and have got growth in them. And how you find that out is by reading information, even summarized information around the company, where it's going, where it's investing its resources, and how responsible the leadership of that business is in terms of what they do on a day-to-day, year-to-year basis. Profit share is something that PPS does for its members. So how our business works as a mutual is we have professionals from all over South Africa who have got a risk or protection or investment need that they have. So in exchange for a premium, PPS will give you cover for life or for your sickness or whatever peril that you might face. And for that premium, the premium is broken down to say this is how much the risk portion of that premium is. We make provisions for claims, we make provisions for administration costs, and then from there, profits emerge. And profits are a function of the premiums less the expenses. And when the profits emerge, those profits are then shared with our members. In a listed entity, you've got shareholders, and when those profits emerge, they go to those individual shareholders. In the case of PPS, when the profits emerge, they are shared with all our members. So when you're a member of PPS, you are like a shareholder of PPS. And when profits emerge, we then declare our profit share that we share with all our members, and over time that money, although it sits on our balance sheet, it grows and it grows and it grows, and when you reach retirement, that money is then given to you as part of your retirement benefits, having been a PPS member for many years. And if I look at the profit share amounts that many of our members who are retiring get, it's a lot of money. It's in the hundreds of thousands. And that's almost like a dividend, but without ever having to put your own capital in there. So as the business grows and as the business makes profit, you share in those profits. It's important that businesses in South Africa perform well because that grows our economy. People speak about the economy. The economy is a collection of all our efforts. Many people think that, oh, but I don't have money to invest. If you have a pension or even have some kind of shares, all of those returns by those companies impact you because that is what grows your pension. Right? And when the economy grows, the country's tax base increases. When the country's tax base increases, then we're able to invest more and we're able to support citizens of South Africa a lot more. So it's important that the economy performs well, because when it performs, we get more jobs. When we get more jobs, we increase the tax base. Then we get more social services that are available to all of us, and we all benefit. So everyone has an interest in how businesses perform.